The Cybertruck is on display at the Tesla store behind me. This weekend, the company started showcasing the futuristic new vehicle in 8 Chinese cities, including here in Beijing. Tesla continues to be a fan favorite among EV drivers here, despite fierce competition by local brands. One of the criticisms of Tesla is that it doesn't refresh its models quickly enough, especially when compared to some of its Chinese rivals. The Cybertruck, Tesla has not officially announced that it would come to China. In fact, Elon Musk has gone on record to say that it's going to be difficult, and one of the issues has been the regulatory environment, especially around trucks. But one interesting point that was picked up by many fans is that the name of the Cybertruck in Chinese avoids the word truck that's seen as a way for Tesla perhaps to eventually launch the Cybertruck here. Now, I wonder, aside from just the names and what the implications are, in the US, of course, pickup trucks are the most popular type of vehicle. What's the case in China in terms of that kind of appetite for something that even vaguely looks like a pickup truck? It's interesting because here you really can't get a pickup truck, or if you do, you're not able to drive into the city, like into some of the more densely packed areas. So there are a lot of regulations around it. It's interesting that in the name, people love to see these big cars, they love driving them. That's what they were talking about. Everyone's impressed by the size. They love the look. They were talking about how it looks like an armored vehicle. People loved it. But the regulations are such that they don't allow what would be considered a pickup truck into the more densely packed parts of the city. So the fact that it was called an urban traveling wagon, maybe not so catchy, but maybe it could get you around some of the regulations. Hold on to your seats, folks, because we've got some electrifying updates on Tesla's roller coaster ride in the world of finance. Tesla stock is going crazy today. What's fueling this sudden frenzy? Buckle up as we peel back the layers of mystery and suspense, unveiling the secrets behind Tesla's electrifying surge. In this video, we've got the inside scoop on why Tesla stock is making waves in the market, from eye-popping gains to game-changing strategies. You won't want to miss a moment of this electrifying update. But before we dive in, do us a solid favor, hit that like button and subscribe to Tesla Stock News for the latest updates. Let's get started. In the world of financial markets, Tesla stock is currently surging by approximately 2.4, marking its most impressive performance since December 21st, 2023. Notably, the entire year of 2024 has seen Tesla stock struggle to close up by even 1%. Now let's delve into some breaking news that sheds light on why Tesla's stock is experiencing this 2.5% boost. Viewers can anticipate a significant uptick in Tesla's capital expenditures for the year 2024, exceeding the staggering figure of $10 billion. Moreover, projections suggest that in the subsequent 2 fiscal years, the expenditure will hover between $8 to $10 billion. In simpler terms, Tesla is gearing up to invest more heavily this year while planning to cut down on expenses in 2025 and 2026. This strategic move is poised to potentially bolster earnings per share for Tesla stock, paving the way for higher growth prospects next year. While this year's increased spending may temporarily impact Tesla's financial metrics, it's crucial to recognize that the bulk of this investment is primarily directed towards expanding production lines, especially for the highly anticipated Model 2. Therefore, although it might create short-term challenges, the long-term outlook appears promising as the financial burden on Tesla's business is likely to diminish in the coming years. Notably, this news holds even more significance due to the fact that Tesla's stock has been trading in oversold territory recently. This upward trajectory is having a profound and positive influence on Tesla's stock performance today. Furthermore, there's exciting news emanating from China as Tesla's Cybertruck garners massive attention during its national tour in the country. Speculations are arising about the possibility of Tesla introducing a smaller version of the Cybertruck to meet road regulations in China. In a market that witnessed the sale of 8 million electric vehicles last year, such attention around Tesla, be it for the Cybertruck or any other model, signifies promising developments as Tesla continues to capture the imagination of consumers worldwide. It's evident that the EV revolution is in full swing. The spotlight on Tesla's latest offerings in China speaks volumes about its global appeal and its potential to shape the future of transportation. Tesla's recently published 10K report highlights their historical ability to achieve sales without resorting to traditional advertising, maintaining relatively low marketing expenses. However, in 2023, Tesla's advertising efforts underwent a transformation with approximately 400 different ads now in circulation. This shift towards a more targeted advertising campaign seems to be yielding results, indicating a potential avenue for growth, considering that individuals who still rely on cable television may be less exposed to EV-related information. A Super Bowl commercial could be a strategic move to reach this demographic. It's worth pondering whether Tesla should seize this opportunity. Your thoughts on this matter are welcome in the comment section below. Tesla stock may also be linked to the anticipation of weekly insurance registration numbers from China set to be released tomorrow. If these numbers align with expectations ranging from 11,000 to 13,000, it could provide a significant boost to the stock. Since Tesla has refrained from offering formal guidance, these weekly figures have assumed increased importance, influencing market sentiment and Tesla's performance accordingly. Despite today's nearly 3% rally, Tesla's relative strength. Index still stands at a modest 24.44%. The company's global workforce has expanded from 128,000 at the end of 2022 to an impressive 473,000 employees worldwide. Furthermore, with Tesla's 10K report now filed, viewers can anticipate an upcoming Tesla all-hands meeting which Elon Musk is likely to share with the public. Shifting gears, let's pivot to CNBC's coverage of the truck display at a Tesla store in China. While Tesla remains a crowd favorite among EV enthusiasts, concerns linger about the speed at which Tesla refreshes its models, especially in comparison to its Chinese competitors. Despite challenges posed by the regulatory environment, it's intriguing to note that the Chinese name for the Cybertruck avoids the term truck. This strategic choice could potentially signify Tesla's intentions for the Cybertruck's future in China. So beyond nomenclature, what are the broader implications of this decision? Let's explore that as we continue our coverage. Another factor propelling Tesla's performance today is the movement in 10-year Treasury yields, which have dipped by approximately 6.2 basis points, settling at 4.09%. While today didn't bring much economic data, the previous month's Dallas Fed Manufacturing Index painted a grim picture with a reading of -27.4, far worse than the expected -23. This underscores the notion that the Federal Reserve should consider rate cuts sooner rather than later. Tomorrow holds promise with several critical economic data releases both in Europe and the United States. Stay tuned for our next video where we will delve into these data points, set expectations, and provide insights. Additionally, Tesla's stock has witnessed a flurry of option activity today. While we don't have the final figures at this moment due to the timing of this video, the preliminary data shows that hedge funds and institutions have placed 710 orders totaling $181 million, with a favorable order value of 55%. Looking at the broader picture, the call side volume constituted 52.2% compared to 47.72% for the put side. Open interest for this Friday tilts heavily toward the call side at 57.53%, with the put side comprising 42.47%. Regarding short positions in Tesla, they currently stand at a substantial $14.78 billion, with a 2.92% short interest of free float. Notably, the cost to borrow is at a maximum of about 2.3% today. Approximately 2.34 million shares were borrowed, potentially for short-selling purposes, while around 677,000 shares were returned. This net borrowing of approximately 1.66 million shares represents a potential reservoir of dry powder for shorting Tesla. However, as the tide appears to be turning in Tesla's favor, these short positions might think twice before proceeding. Let's talk about the participation ratio. This metric measures the ratio of unique accounts posting on a stream compared to the total number of messages on that stream. In simpler terms, it gauges how many different people are contributing to a discussion. A participation ratio hovering around 60 is categorized as high, and in the context of Tesla stock, the higher the better. It's a sign of broad engagement and interest in the stock. And right now, as we're observing, not everyone is exuding extreme bullishness about Tesla. But here's the thing, this could be precisely the time to be bullish. Remember the golden rule, buy low, sell high. Even though Tesla has experienced a modest rally, the relative strength index is still at a relatively low 25.36. This suggests there's potential for further upside in the coming days. Now, shifting gears, let's talk about the percentage of stocks above their 50-day moving average. It's up by a modest 0.31% today, landing at 65.12%. But here's the deal, we're still a long way off from the high of 86%. This indicates that the market is still somewhat top-heavy. So what's the key to sustaining a bull market? Well, there are two scenarios to consider. Either the underperforming half of the market needs to multiple of 170 times in the next 12 months. That's a significant potential for upside. If rates continue to drop, it becomes cheaper for consumers to finance their Tesla purchases. Tesla has a choice here. They could pass on these savings to consumers, making Teslas more affordable, or they could raise prices slightly, sharing the benefits with consumers while boosting their own earnings. Either way, it's a win-win situation for Tesla. In today's Tesla stock news, we witnessed Tesla stock surging by approximately 2.4, marking its most significant gain since December 2023. The surge is attributed to Tesla's plans for increased capital expenditures in 2024 and strategic spending cuts in the following years, potentially boosting earnings per share. Furthermore, the attention-grabbing national tour of Tesla's Cybertruck in China and the possibility of A,